Yo, what's up, guys? Hope y'all are doing well. Just give me a second. Kind of organizing everything here. Let me just check the sound real quick. Cool. Sounds good. Yo, what's up, guys? Alrighty. So, yeah, I wanted to do something about Bitcoin on public for everyone to whatever. I just want to hide these. Okay, cool. So I'm just gonna start with that, and this isn't exactly like super well planned or anything, as far as like me being able to do it in a kind of presentation form, but I'm just gonna run through my thoughts in hopefully an efficient way and try not to ramble too much. But basically, I want to talk about how one of the important ways that I look at price action with anything is where did the move come from, and where could that lead to me being able to understand where it might be going. And moves, like knowing how you got there can give me a big heads up for knowing where we could be targeting on a current move. Like right now, the current move on this time frame is going up here. So where could we be going up? And then I look for, well, how did we get down here in the first place? And I try to find a reciprocal of that. So one of the main reciprocals that I've been talking about ever since forever is that on this scalp pull here, where we reacted off the 3-4, now we're up into the 3-2-5-4 area, and that's a reciprocal zone for a pull, like a good pull that's been respected, and then it continues to be respected here in a 3-4. This is a normal move. On low time frames, you see this stuff all the time. What does it mean? It can mean a lot of things. I mean, it could mean that there would be a way to finally get a move down to the 4,700 area. Like generally, when we're talking about using this pull on lower time frames and everything, if you get a 3-4 to kickback, then a lot of times you'd be expecting it to come to the golden pocket, which now normally I look for like the 706 and stuff, but in this case, because it's such high time frame, it's not something that not really looking to go that low. And then the 832 is in the negatives, so like it literally doesn't even make sense. So that is a possible implication, and again, you see it all the time on low time frames. I have it on log here, so it's a bit wonky. So there's one. Okay, so there's one reciprocal here, right? And that's totally fine. But we can get rid of that now. And then another thing that I want to do here is think about. So we got to this 3-4 from this move here. Another thing that means, it means whoever was investing to go short on this run here, that they were taking their profits there at the 3-4. Like that's it can. The way that I assume that it is and think about it is that a lot of that's algo driven, and then whoever knows how to use the fibs like that, whatever scalpers and scalper day traders know how to use the fibs like that. But primarily, it's my belief that it's mostly algo driven, why they react like that. So the other thing that the other thing that I want to pay attention to here is the first big consolidation area before the next move down, which for me here on the leg down would be coming up here. It would be this consolidation range. A little more obvious when you make it skinnier, like this is the big consolidation range before the final move down. Here, I would view it as this whole range here. Like that. You had an initial move down, consolidated, and then continued. And here you had an initial move up, consolidated, reaccumulated, and then went up here. So those are going to be pretty important here. I'm on a 4-day right now because it's with being able to see all of this price action, it's just a nice middle ground between the day and the weekly for me to see everything but not have too much stuff. So another thing that I want to be thinking about is timing. We have this consolidation range here, and just using like these trend-based fibs. Just using these trend-based fibs, you can say if you like using the timing between here and here, that the first low came right about at the 0.5, and then the ultimate low came right around the 2, it's just saying that the factoring in the accumulation, the time it took to accumulate in this range, that the final low pivot didn't end up, it ended up taking twice the amount of time as this accumulation. But the first initial low was at the 0.5. It's interesting because we can, if we think of this whole area here as another accumulation range, and I'm gonna pull it to the first low, and then just take it to where the momentum started to reverse it here. So just an interesting little thing here is if you do a trend-based time here, that I don't know why these, let's not put that for this accumulation range, if we want to think this as an accumulation range, this first leg up, it did more or less like around the 0.5. This isn't something that has to be perfect, because like it's certainly subjective in how you want to think of like an accumulation range or something. Like this is a little more subjective looking than this. I totally get that, but whatever. Like the first move up kind of went to the 0.5. Now we're at the 2, and like this last high that we made before locally, at least locally coming down, was right on the 2 of this accumulation range. So you can just think of that like, okay, positions were accumulated down here, and it took, you could argue that it took twice the amount of time to start getting out of those positions, just like it did here, right? The low here. So it's just something I'm thinking about, and the timing of that is, it's interesting that it's happening right on the 2 of that as well. And then another thing we could potentially look at is for the timing on this. So if we're just doing the same thing here for this accumulation range, that we're right at the 0.5 of that. And if you remember, like when you're taking the accumulation here, that the first low was right around the 0.5 of that. So it's like, it makes me think a bunch of things. It's like timing wise, it could definitely be, it could be a pivot, or it turns into a longer type thing, and we get it like one more high like later, and that would be a bearish plan. It doesn't have to be super bearish. It doesn't have to come down to the 618 down here at 4,700, but there's still this whole area here where there's a massive like volume disparity. If we just pull a range of volume here, like there's a massive volume disparity in this range, and I just think we could still be bullish, like not making more lows, but just come down and fill that, load up some more positions, make people really scared, too scared. Everybody that was super bullish and that was longing this whole way up is too scared to buy here, when really it ends up being a great opportunity before the new bull run. So that's, that kind of scenario is definitely in play. Or we can do something where we take the low just like barely one more time, or we can have the super bearish idea where we go down to that 4,700 area. Either way, the timing aspect of this is kind of like shaping out pretty nicely. Another thing to potentially consider here, let me throw on a fractal thing here, just to give, not to say that something like this is going to be exactly, like, I know, like, everything's different, nothing's going to happen exactly like it has before, if you, like, as far as these exact fractals, but it just kind of gives, would help give a little bit of patience, because when this first made, like, this got really impulsive and then it finally made a low here, right? And then, but there ended up being one more low, as is often the case, when you impulse into an area, and you do make a good low from that there often is one more, right? You can think of that in terms of EW or however you want. It just, it's just pretty common here. So all I did, I just took a fractal here and I flipped it. That's all I did. So, you could just kind of imagine, like, if this took this long to accumulate long positions or to buy spot, then you could also argue that it would take just as much time to unload all those positions. You can't just unload them all at once, or you're gonna cause the market to dump too fast, and you're gonna get a bad price. Whereas if you slowly like dump it out. So yeah, I mean, I was thinking just, and again, the fractal is just kind of like to give you an idea a bit, to be patient, but it would give another reason to maybe come up, make one more high around that like 5-4 area. And if the market does start like coming down like this, that it might not, like, you might not have to be like too afraid yet, and could expect some like possibly one more high. That's something I was kind of thinking of. But it likely will take some time. I guess it's like, that's a scenario where it would take some time. The other thing, like, just taking a fractal from here, it's the timing wise is very different, but if you stretch it out, I do have to kind of move it here. If you stretch it out a bit, hold on, I'm trying to make it, yeah, like that. Like, that's also pretty similar to, like, the way, I mean, of course it's different, but it's pretty similar. And this one didn't give that much time here. It also didn't accumulate for as long, but it didn't give as much time. So yeah, I mean, that's something that certainly could be, something like this could be in play as well. And it did hit a, it hit a good area. And I'll show you, so now, like, it kind of explains some reciprocal things in timing, as far as timing, and then that one scalp hole. But yeah, let me go over these reciprocal things and like why price reacted as far as fib targets that I use. So besides the scalp hole, I already went over that. Another thing that I like doing when you have an accumulation range type deal is using what I would call, like, this is something I call momentum pull. I learned that from Random. And it just gives you an idea. You're assuming that that the traders who are right about this going down, that they're going to wait for the first high to get put in a correction, and then they're going to start loading their shorts. So it would start around here, loading up shorts here, and then they start market shorting down and kind of like pushing price down, and then you have your final pivot here. All you do for that pull, you're just going to take the high, go left to where that high came from, the major pivot that high came from, and then go right to the momentum pivot that eventually pushed price to break the market structure down. I have it on, I believe is this log or non-log? Okay, this is linear here, and you can see it gave a perfect reaction here at the 832, and then you can kind of speculate that it might come down to the 2. It didn't end up like actually hitting the 2 here, but it got pretty close. The other thing you could do, it's not, in my experience, it's not like quite as exact, but if you pull a fixed range, and then you could take the low and the high of the range, and then, the opposite way. The high and the low of the range, and then put your bring this up to the point around the 0.5 of the value area of that. It's kind of like a TPO way to do it. If you throw it in log, yeah, like it was somewhat decent here, but then it kind of front ran that. If you wanted to do it just from here, then it'd be like you get a little bit better results here, not using that initial information. So that's another way to do it. But yeah, like I think an easier way to do it, if you have the right, like if the price is giving the right look for it, is to use the high, the low, and then the momentum pivot here. So and that, again, this was the reaccumulation range to go lower, reaccumulation of shorts to go lower. So now if we do the same thing here, we have this low, this high, and then the momentum pivot here, and in this case throwing it in linear, and then we have like this last high here. I mean, we can literally go to a 1 minute and come on, load. Yeah, you can see how nicely that reacted pretty nicely right there on the 3236 of that. So go back to the 4-day here. So yeah, the same reaccumulate. So the reaccumulation here that gave the fibs that ended up being the low of here. Now you have a reaccumulation to go up, and it hits all the fibs here. So that's the reciprocal kind of thing that I'm talking about here. Yeah. So the only difference is that this 2832 zone is in log because you're going down. When you're going down on high time frame, you typically have to use log because the linear targets are much lower when you're going down. At least with something like Bitcoin. With Forex, it doesn't matter. But yeah, if we wanted to use linear here, then like I said, it almost got to the 2. And then if I wanna if I wanna say, okay, well then let me see what it would be like in log on the way up. Well, that could be something, again, that could lend to that one last push up here. If say we did something where we come down and then we have one last push up and then we have a move down, that could be a reason to see something like that. I don't think it would have to. I think we hit enough stuff that could be the high. There's always that thought that there can be like one more high, especially after such a big move like this, at a little more consolidating, kind of like dicking around here, however it wants to do that, like just kind of doing whatever, and then make one more high up here, and then come lower. It can do that. So I'm not necessarily trying to call that this last high was like the top. I think it could be, but there could be a chance of one more high. I do think that I know that this didn't take a lot of time. I kind of feel like this is going to take some time to play out. And yeah, there's no reason to be like necessarily like over eager. Um, but just kind of watch out for some kind of like if we really did start breaking down with similar price action that what happened with the all-time high, then maybe that would be something to kind of hone in on low time frames and look for basically the highest FEG, like bearish FEG that's getting or order block that's being made on the way down like that. You could be thinking about something like that, but yeah. So it just depends. It depends how it happens. If we come and break down all of this like kind of rapidly, then it's really going to depend what it looks like as we come back up. But if we continue to shoot down, it could certainly do something like that. And yeah, I mean, if I haven't explained this to y'all before, or if it's like the first time that you're hearing any of this stuff, like these fibs, these fibs are kind of like, it's kind of, I would say it's quantitative based technical analysis, because you're thinking of it in terms of there's an investment here in this range, and these would be like the risk that you're putting on, if I want to put it like the risk that you're putting on in this range, let's say you're accumulating around the 0.5, and let's say let me try to get this right. Like you're risking a 1 and 0 to get like a 2 to 0 or 3 to 0, basically like a 3 to 1, sorry, a 2 to 1 or a 3 to 1 risk reward. Like that's what it means. So because yeah, like a lot of retail investors they accumulate, or they dollar cost average, and then and they're maybe just holding forever. Like that's certainly the case. That certainly can be the case for a lot of retail investors. But institutional money and institutional firms, hedge funds, things like that, they're not holding forever. Like if they're accumulating in this range and they can get a 3 to 1, which you can see here, that's just assuming that you averaged around the 0.5, that you can get a 3 to 1 on this, then you're out. You're out of your position, because you like, why would you like why as an institution you're 100% satisfied with your 3 to 1 playing out, and then you're out. Like that's the thought process of this. And then when you use these specific fibs, it just ends up being that these, like the 2706, 2832, like 3236, those are just the fib levels that end up being really nice. But simply put, yeah, if you just think of it in terms like quantitative, like investment from an institution would be interested in taking profits at a 1 to 1, a 2 to 1, a 3 to 1. After that, like, you know, it's probably like these guys aren't building positions up here after a move like this. They're gonna wait for price to come down, make a low, and then start to range, and then they're gonna think about which way they want to accumulate a position for, up or down. But they're not gonna be doing it at the top right here on this move. That's for sure. They're gonna be selling, and if all this fundamentals about the ETFs, you know, all these ETFs got approved, so I guess the fundamental reasons for the bullish case is that the ETFs have to purchase spot. They have to purchase spot Bitcoin because they have to. Well, I guess the way that I'm thinking of it, and maybe it's like an internal bear in me, but the way that I'm thinking about it is that they would, if they have to buy, that's fine, but they're going to probably be buying into these guys, like order, like they're selling here. So if ETFs have to buy here, they're the guys who are buying here and buying here, that yeah, they're using the extra volume to be able to get out of their bags here. So yeah, I don't know, that's kind of how I'm looking at it. So the other thing that we can do here, we can do it. We can do a momentum. We can do the same momentum pull here from this low all the way up to this high, and then this low here. And you can see we came into the 2832 of that. The 3236 of that is just above right here. Okay, sorry. It was looking my stream playback was looking blurry, but I don't think it's blurry forever. I think it was just using my internet was using a lower setting. But yeah, if it's blurry, then y'all can let me know. Anyway, if we take this whole investment range, that would be like this whole investment range here to, if you think we made a good low here, so after we start making a high, you're just loading up, and then basically this is your momentum pivot to push it up out of the range. We're into that 2832 area there, which again, it would give a potential reason for one more high because the 3236 is up here, which would fit nicely with this 5-4 and all that. And often what'll happen is you'll hit something on your, let's call this medium time frame and let's call this high time frame accumulation. You'll hit the medium time frame first, and then eventually you do make it up to the high time frame one. And then what you'll do in the meantime is whatever consolidation we might do here, if we do have one more push, that you'll use something more locally on a lower time frame to try to match up with the high time frame target here, if it wants to have one more push up. But as far as I'm concerned, all these reaccumulation targets have been hit. Those guys are all selling, and they're not going to rebuy here at the top. Like, they're selling at the top. The first place that I would even think about some kind of reaccumulation for higher would probably be a 50% retrace of this whole thing, this leg here. So maybe we do a 50% retrace kind of thing, and then you're really gonna have to watch out, because this could, whatever, like if we do something like that, like this could just be this all over again, like an accumulation of shorts to go down. So yeah, just look for a range, short the high, long the low. One of them will play out. Yeah, I guess the point of all of this is that there's a lot of reciprocal kind of price action for the reason that we had a good low here would be the same reason that this could be a really good high. Yeah, I think I've already said I think this will take some time to play out, but yeah, we'll just have to see. I think it's definitely it's definitely the area to be interested in, and looking for the signs of weakness that you might normally look for with the kind of TA that whatever kind of TA that y'all use, to, like, if you are a swing trader, that you could think about looking for some kind of swing short, hedging your spot Bitcoin, like something like that. Use your own TA, like you don't have to do what I'm doing, but yeah, I think it would be prudent to use your TA to start looking for potential signs of weakness, and not to get too hyped up by all the bullishness that seems to be in the air. And it doesn't mean that I don't want to be a perma bear. This is just what this is what everything is telling me right now, and that's it. It's like pretty as simple as that. The other really nice pull here. There's a scalp pull from down here up to here, and we hit the -1 of that too. So this would be factoring in. This would be factoring in the investment to go long, all the way down here to that low, basically. So. If like we put in a low here, we swept the lows here, put in a low, we had some bounce back, and then some investors might be thinking, you know what, I think like we'll probably go lower, but I have no idea how low we'll go. I am totally comfortable with just with just buying on the way down, because I know eventually it'll reverse. And so that kind of investment here, we hit the one of that. And all that's saying is the wait, oh, this is in log, that's why. There. In linear. So yeah, it's just the 1-to-1 risk to reward for them. That's all that's saying. And it was we liked this pool. Since we were getting reactions here, because we were thinking of it like a preload of this scalp pool. So we made it to the one of that. So there's a lot of could Bitcoin go higher? Yeah, of course. But I'm just thinking of it in terms of like, if all these guys are taking profits from all these moves, like if this is the area where they would be taking the profits, then who the hell is buying when all these guys are selling? That's gonna actually make it continue here. It doesn't make any sense to me. I'm happy to be wrong, and if I'm wrong, then we'll go over it and we'll see what happened, and we'll try to think about what we could have seen or whatever. But yeah, I mean, like, the only other thing to do is just to start throwing everything into log, like, or like, say I go to a monthly chart, then my scalp hole would be here. So there could be like, if then it would be like, okay, well, like, all of that was too, like, everything I was showing was too low time frame, and let's say we come up here to like 58K, and then there could be a really nice play here like that, which you only see something like this when you switch over to a monthly. But yeah, you can see actually NASDAQ did something kind of similar here. If you look at look at how this looks here, using this pull here, that we actually ended up coming all the way down to the 618 and then reacted perfectly from the 5-4 here. But it's just the way that this thing looks here. And then if I go back to here, so it's just kind of like here. So could it could see something like that, and maybe maybe the weekly time frame is just not high enough time frame for the move that's going to happen, but I just think I think there'd be another, I think like the savvy investors will be wanting, who would be taking profits here, will be wanting like a deeper retrace to load back up, or to think about loading back up for positions. So there's a big FEG in here. If you just kind of like take all these highs and this like these wick highs through this FEG, like it would give just throwing like a 0.5 on here, like all I'm really asking for is at least a 50% discount for people to think about getting, like, buying back for some kind of discount again, and this would give more like a 75% discount, it looks like. So I don't know, just trying to think about it logically, and like what savvy investors do. Like, are the savvy investors really buying right now here? Probably not. Yeah, this is like the 706 or so. So at least come down here and that's what I would prefer from a move like this. And then maybe there's continuation. Maybe there's another there could we could do a lot of things here. Like, this could range forever is another thing. Like, it could literally just range forever and then finally make a move up. Can do a lot. So I think I kind of like that plan. See what else. I'm just trying to find maybe a pull for confluence here. I mean, if you were kind of looking, I know it's wonky. I definitely know it's wonky and all that, but if you were kind of looking at this like an ending diag, then like 1, 2, 3, 4, 5. I mean, I don't like how that, like obviously this would take that low, which doesn't really work, but like if we're just pulling fibs, thinking about it from an investment perspective, like a potential investment to go short here, and not thinking about it being so strict on EW, but it just that it looks like a diag, it looks like it could be a diag, and then thinking about that as an investment, then you can use a pull from you can use a pull like this, and that does give that does give targets right here in this area. So I think that could be really nice. Not saying it has to happen. I'm just saying if it does happen, that's an area where I'd be interested. Where I'd be interested in thinking that there could put in some kind of low, some kind of reaccumulation type deal. But in the back of my mind, I would also know that we did hit a very significant area that it reacted from to get down here. So even reacting down here, I know that there is the case that the bearish side, comes to fill in this volume gap area I was talking about here, or to go to even like lower targets. So yeah, that's I think that kind of covers everything. Okay, the other thing from a EW perspective, if this is this whole thing could be a zigzag potentially, where you have your 1, 2, 3, 4, 5, and then you have a running flat as a B. So you have a 1, 2, 3, 4, 5 A, and you have a running flat B, and then you have a 1, 2, 3, 4, 5 C to finish a zigzag, right? And for corrective price like that, I would use a fib pull like this from just what I'm purporting to be the A, and a zigzag like will often go to the 1 to 114 of that. So yeah, this could be a 535 zigzag that is over now. So there's that too. So there's an EW reason for it. Like there's a smart money concept reason for it. If you were thinking that the goal was to take the liquidity off this high, there's a smart money concept for it. There's a ton of like quantitative analysis type reasons for it, and all these reasons are reciprocal with time and targets and everything. So yeah, I don't know. I would love to be surprised, and it would be totally fine with me. We would just move forward with something higher time frame and look for that. But anyway, that's my thoughts with Bitcoin at least. And then I wanted to show one thing for how how you could get an entry here. So I had those higher targets. Like I knew that we were in this, like this whole zone was hitting a lot of stuff for me. And then this here, like this low, like I know it didn't take the overall lows, but it took a bunch of these lows, this one and this one. So to me, it was some kind of sign of weakness here, but it didn't quite hit everything for me yet. So it's kind of like waiting on that, and then we pop back up here, and then this big move down. That also, I think that happened on the fake news. Yeah, that was the fake news I think, here. And then locally here, what I did was I saw this as a diag 1, 2, 3, 4, 5. So I used my pull 052. Throw this back on linear. Okay, it is on linear. So you can use this pull for diags, for leading diags. You just pull from the 0 to the 5 to the 2. That's all. And then you look for this. You look for these areas basically. The 706 to 832, and the 2706 to 832, and like sometimes all the way to the 3236 sometimes. But so looking at these two areas, and then I matched that up with a corrective pull here, the same thing we used on a higher time frame. So in this case, there's confluence with this. This has confluence with the 114, and then this box had confluence with the 3-4 here. So basically, like what I did is I just kind of like moved it up there and then down there, and then this one I just moved, like I did it like that. So yeah, that's how I was looking for those areas. And then something else. What else did I? Oh yeah, the 3-4 of this too. I think. Was it not? I thought it was. Was it this one? No, I thought it was. Maybe it was on Coinbase, and I was looking at I'm not sure anyway. But that kind of 3-4 would be more. Oh, yeah. This is what I did. Okay, so I did a scalp pull here, and basically pulled it like I saw that there was a reaction here, but there's not, like, I know that this high goes all the way up here, but I never pull scalp pulls to the very high of a move anyway. I'm always looking for like a lower high to pull it from. But I just kind of thought, like, I was just kind of moving it around to where it would have gotten respect here at the 3-4, and then it gave respect here on the kickback, and it also happens to be this last kind of set of highs before the fake news. So I was just thinking, like, yeah, maybe like that's fine, and not even count this for like some kind of fake news thing. So anyway, 3-4 kickback, just to give the 832, just to give even more confidence with all that other stuff. Yeah, I mean, there's a paper trade in here, but that you can see here, it's not real, it's just paper, because I don't trade on TradingView, I trade on a task. But yeah, so I didn't catch the absolute high, but once it came back down here, then I saw that being a significant high enough for me to market enter on the way down here. I guess you can think of it kind of like how you would just market into like an SFP type trade. Yeah. So yeah, let me kind of switch focus then into the live trade breakdowns. If you have any questions, I am looking at the chat, so feel free to ask any questions if you want, and then I'll look back at it after I go over these trades. I'm gonna go over the 4 trades that I took. They're just scalps. They're really quick. It might not be super interesting if you're not a scalper, but yeah, it is quick. But yeah, there are 4 scalps that I took during the CPI news day yesterday. So I'm gonna switch over to that now. This, and I'll maximize it here. Okay, so we did put in what I thought could be a significant high, but I love the counter trend reactions, because they're usually, because I like the quickness of the counter trend reactions, and then we put in a low right here. This was the CPI candle here. So we swept the highs on it barely, but we swept the highs on it, and then we put in a low. That low ended up being, this 1, 1, 2, 3, 6 zone of the scalp pull that would factor in the investment to go short during the ranging before the CPI news, up to the CPI news, and then to push it down, right? So I felt like it could be a decent low. Obviously, like I said earlier, like I said before, when you make a really impulsive low, it's usually not the low. There's usually one more. So I did have that in the back of my mind. But locally here, we put in a low. We had a nice range going on, and this is the first time that we came into about. If you just eyeball, it's about the 80 to 90% retracement range of this mini range on the 1 minute. Also, keep in mind that this is pretty soon after the CPI news still, and there's a decent amount of volatility. Prices moving pretty quickly, but yeah, I just took a scalpel here locally to get something to kind of hone in on a level here. So this is this last move up here, basically doing a scalp pull there. It had a reaction off the 3-4. Like first it was reacting from the 3-2 on the way down, then I had a reaction from the 3-4. That just tells me that it's a good pull, and that if it gets and then to be interested in these 706, 832, -1 areas. And if there's a good reaction there, know that I am counter trending. This was very impulsive down, but we are at the -1, and it was a respected pull. So what I'm doing here is I'm waiting to be safe, because it is counter trend. I'm waiting for a little bit of. I'm playing it more conservatively instead of trying to jump in right on the -1, because this 3-4 being respected is great, but sometimes when price is very impulsive, it can respect the 3-4, and then you assume respect here at the 832 -1 area. But what ends up happening is it goes down to the 2706 2832 area of that same pull instead, and it'll just like shoot straight through this. So because we had that impulsive move down, I'm playing it a little bit careful here, and I wanted to wait for some market structure breaks here. So if we look on this range XV on a very low time frame here, I was kind of like I was looking for this to get broken. Like there's a little baby one here. If I wanted to be really aggressive, we like broke it and then came and retrace, and I could have entered there. But I wanted at least something like that to get broken, where price moved up here and then came down, like maybe into this little order block here. That's what I was kind of waiting for. I didn't quite get that. I didn't like I want. When this put in the high and this was coming down here, I was kind of like waiting for it to come down a bit lower, and it's a bit my mistake, because what I often look for on the range XV at least is like I kind of build up a little box and like order, like I kind of consider it like an order block, where it's the last low order block here on the way down, and then I match that up with the first one on the way up. So this coming down to here, that could have definitely been a play, and I just ended up kind of like missing it. But price was moving kind of fast, like it's all right. So I realized I missed that, but then seeing the way that it looks here on range XV, I was kind of pre-imagining this turning into a leading diag, like already, like a 1, 2, 3, 4, 5. So yeah, I'm basically I'm jumping into what I think might be just the 4 of a leading diag, and just looking for a $10 to $15 move. I have my scalp pull here. I also noticed that price reacted from the 5-4 here of the scalp pull on the way up. So yeah, I'm just basically looking for I don't know, just a quick little move. But I don't want to be too greedy on this either, because if it is a leading diag, like I think it might be, then the after it's done with the 5, 1, 2, 3, 4, 5, that 2 can come like all the way down here. So that was another thing I was keeping in mind. And yeah, I ended up taking it for about $12.5 move. So it ended up being like, with one mini contract, that it ends up being like 240 or 245 or like something like that. So that was the first trade of the CPI, that 245 from that, just using one mini. And we'll go to the next trade here. This is right on open, so you can see I brought up the scalp pull here because it was giving a little bit more respect. I was seeing a little bit more respect from it. So the original one from the last clip, I had it here, but I moved it up to here because that showed a little more respect here and on the 3-4 here. And yeah, I know we're right on open now. So it could just pop right into the -1 and then have a move down here, but I'm definitely not going to enter right away. I want to watch it play out a little bit, wait for a market structure shift, because at this point there's no market structure breaks or anything for me to potentially look for like a low time frame OTE kind of thing. See it coming up to the 706, coming up to the 832, coming up to the potentially up to the -1, and then also matching up with the kickback of this pull, the 38254 area of that, and then also a backtest of this higher time frame 706, which I have from a much higher time frame pull there. So it was hitting multiple time frames of levels for me, and I'm just kind of waiting this out a little bit. Like I would be okay now. Like you can see we're getting on the 1 minute, like we're reacting perfectly from this 832 level a couple times. So what I'd be waiting for here is one more candle to kind of like take the highs of it and then come down, or the price would come up to the -100 or the 236 here. So I don't know what's gonna happen. I'm just waiting. Now, I had this limit here, so I had this limit here ready to sell off that, seeing some finally seeing some like bearish pressure here, but I only wanted to do that if this ended up taking this low, so there's a little bit like I'm getting a little bit of weakness that there's market structure breaking, but when I see that low is this low is holding, yeah, I'm not jumping in yet. I'm just waiting. And when I do this on a task where I have the limit here and then where I'm like holding it down like that, it just if you hold it down past where price is, it just acts like a market order. That's all it does. So it came up above to take that high one more time, and it started getting pushed back down on here. So that's when I decided that it looked good to me. 2 perfect taps and then a wick through. So that's pretty perfect for something I'd be looking for. And then in and out. It was just a $10 move for 200, but for $200, but there wasn't that much there wasn't that much confirmation yet. I was taking like a little mini S&P on a 1 minute chart, so it did end up having like it did end up having a nicer move down from that, but it's fine. I got the 245 from the first, and then this and then another 200 from that, so this is a 445 now. This is this open P&L is from a just one micro that I had shorted up somewhere in this area, just to fulfill a swing short idea of mine, but I just wanted to use a micro for that. So yeah, that'll fluctuate a lot throughout the day because price ranges a lot, but yeah. So that was the second trade. Now it'll be let's go to there'll be a third one here soon. Yeah. All right, so this setup here, same scalp pull we've been looking at. It did end up coming all the way up to the 1, 2, 3, 6 here. I kind of I've just waited all this out basically, but then we're coming down to the kickback zone of this pull, and if it already hit its final target, I wouldn't expect this to probably be a full reversal and take the highs again, but a perfect, like a good reaction from the 1 or 1, 2, 3, 6 or whatever, and then coming down on the 5, 4, they'll if it's the first time it's coming back down to the kickback area, they'll usually give a pretty good reaction. So they'll usually give a good reaction. Just don't expect it to be like a full reversal, but usually good for a scalp. And then locally here, I just have I've got a scalp pull here, so I see that we're coming into that like negative 100, 1, 2, 3, 6 area of that, but kind of like being patient, waiting for the kickback. I'm pulling the fibs around a bit to see if there's something else I notice that has respect, and I end up liking this one because that's a little bit cleaner with a perfect tap of the 1 and then coming up above the 1. So I do like that, and I see that this low that's currently here is right on the 382 of that. And then what I'm doing here is I'm finding another scalp pull to come down, seeing which pull gave a nice reaction from a 3-4 to give me confidence that that's the right kind of area to pull it down to, and then just noticing that I would like just a little bit deeper. If this 3-4 is respected, then seeing that like 832 right on the 5-4, that looks pretty juicy to me. So I'm just waiting for that, basically. On a downtrend day, let me try to think about what you're asking. On a downtrend day, would you take a short on the kickback 382? Oh, because of my first short off there, up this short that I had here. I mean, yeah, definitely. And the other thing that you can think about too, you have this really big move, and then you have also a quick move up into the 80 to 90% retracement of that big move. And if you move quickly into the 80 to 90% retracement of a range, then it's pretty high, like that's a pretty high probability zone anyway. And I don't pull like 80-90% fibs. It's just like an eyeball thing. So I would definitely look at that as like, oh yeah, the 80 to 90% retracement area. And again, like I didn't end up catching this high that ended up being the high. I just caught this little one here. But you make a quick little, just one mini. One mini is enough to make $200 on a $10 trade. And you know that if you know that you can get 2 or 3 or 4 of those in a day, then that's pretty good. You don't have to get too crazy, and you can just go for quick little scalps, and then you don't have to sit around and watch price or even really care about catching a big move down. Obviously, it's more money; it'd be thousands of dollars, but it is what it is. I'm too impatient to hold on to trades. That's just my personality. So I have to scalp to kind of do that. But yeah, like 382 on a downtrend day, definitely valid. Coming up above the 5-4 like that, I mean, like all the targets were hit. So it's not like the 5-4, like the kickback zone doesn't have to be like super impactful. It's just like, it's usually good enough for a scalp at least. And now we're in kind of the same thing here on the opposite side, like the opposite thing of this, where we made it all the way to the targets, but the kickback provided a reaction. Now coming like on a lower time frame, we made it all the way to the targets, but the kickback, I'm looking for the kickback that gave a reaction. And here I actually did a pretty aggressive entry there. I didn't wait for any like market structure shifts or anything on a low time frame, which it's a little risky when you're kind of like coming down pretty hard, but there was just so much that came together for me there. Yeah, there was a lot that came together for me here. You had the 832 of this respected pull here. You had the kickback of this respected pull here. So those two fibs coming right together, and then on top of that, you had the IB -1. And that's just the 5-minute IB. So generally speaking, my rule is if you spend 20 or more minutes, like after you open in the 5-minute chart here, if you spend 20 or more minutes inside, like closing candles inside the 5-minute IB, the yellow lines here, then you'd be more interested in a day that is gonna kind of flip-flop between different IB levels, and you'd look to long IB -1, IB -2, or short IB -1, IB -2 on the top. Now this day here, yesterday, we spent 15 minutes and then some of this candle. So it was like, it wasn't quite 20 minutes, it was kind of in the middle of, like I would prefer 20 plus minutes. Sometimes it's just 15 and some change. And that's where the confluence comes in. This was a case where I had a bunch more confluence, so that's why I decided to just like get in that and get out. So got in aggressively, got out really quickly for another 200. So yeah, now it should be at like 6:45 for the day. And then there's one more setup that I end up taking, one more scalp. So let's fast forward to that. Yeah, so 6:45 here with those 3 trades, and then there's there's one long that I take here. Yeah, let's just watch it. That'll kind of explain. I was looking at this pull here. So this is a few hours or a couple hours later in the day. This pull here, like it didn't really give respect here, but it was just the best pull that I could think of for encapsulating like this whole range, and we were moving down. There's just like no other better pull to use. So I used from this high here down to the candle body here. That's what I used. And I, we were kind of approaching the -1 of that. So that's what I was looking. I was looking for that. I'm a little impatient here, which I realized watching the replay. But hey, no one's perfect. I'm there's things that I notice when I watch back these replays, so I can be just a little bit better next time. Because I get in just a little bit too early, and it does end up actually tapping that -1, and I'm like, after that happens, you're like, come on, why didn't I wait? But it was all right. So we're definitely in a zone where I'm expecting some kind of volatility, at least enough to give me a high probability like little scalp trade. the price was very corrective in this little area, but we were flipping market structure like on these little moves. We're flipping market structure. It's kind of chaotic, kind of like seek and destroy, or it's just very corrective. So highs are getting taken, lows are getting taken. Overall, if we're in that kind of situation and a low is getting taken, then I don't mind being a little, I don't mind. We're coming up to a good level for me. I don't mind being a little more aggressive, I guess. But in hindsight, yeah, it didn't actually tap yet here. So this was a little bit too aggressive of an entry, and it's something like this is something I definitely note, and like I'm noting in my own journal when I notice myself make a little mistake like that. I'm pulling it down here because like I know that it can do this, but it's not gonna make me freak out. But yeah, I mean, you can get into a lot of trouble moving your stop loss. Like you probably shouldn't be doing that, and I probably shouldn't be showing it, but it is what it is. That one ended up yeah, so that one ended up kind of coming back and playing out, but it was, I think I should have probably taken a loss on that one, and not moved the stop. Price did end up continuing to go down here instead of making a move up, which like I was thinking was gonna kind of come up here, but it did end up continuing to go down, and I think I got a little lucky there. And that's something, like I say, get a little lucky, but it's something that as a scalper, if you're only shooting for $10 moves, then you get lucky a little bit more often. So it's not necessarily it's not necessarily getting lucky, I guess. Like we were in a nice area. Like I knew there'd probably be some kind of volatility, but I rushed into that long there because the -1 hadn't even hit yet, and I definitely rushed into it. And seeing myself move down the stop loss, I don't. That's something that I'm trying to not do anymore. So I should have waited, but yeah, and that's another thing, like another thing that I'm implementing for myself as well. I'm only trading the first 2.5 hours of the day, and let's see, this is 11:40, 10:49, 48, 48. If I started trading around CPI at like 8:30, then this is already more than 2.5 hours of me staring at the screen. And there's a reason why I am doing that rule, and it's because stuff like this. It's because like after 3 hours of like looking for setups and taking trades, that the brain just gets like a little bit more tired, that it doesn't like quite think about everything as quickly. And I kind of see that for myself, like watching this replay. Even though it wasn't like, this isn't the best example of like what you should be doing. Like probably shouldn't be moving your stop loss like that. But yeah, it's good affirmation to me, kind of seeing again that yeah, when I spend like 3 hours in front of it, that like little mistakes like that happen where I'm not patient enough to actually wait for that -100 to hit. But as a scalper only looking for a $10 move, that one ended up working out. It's just something, yeah, hopefully I'll just work on that, and so won't be doing that. Won't be doing that again. Yeah, I don't see any more questions. I think I answered yours. The 3-2 on the kickbacks, totally good to use. Like even on the way up before it kind of comes to the 3-4, as long as you have some confluence with it, I would say. So yeah, let's see. I'm just gonna jump over. I'll jump over to this again real quick and give. Let's see. This like I could give an example like this again on Bitcoin, where on the way up, we were getting reactions here from this 382 on the way up. That is possible too. Like the trend is up. You could be thinking, well, there's a lot of stuff. You know, there are things to be like potentially bearish about too. But yeah, you can see how that can like play out as a preload, as long as you have confluence in all that. Let's see. That didn't quite make it, huh? Like if you pull impulse fibs from here before this impulsive move down, like there was confluence here in the 706-832 zone of there, so there's a little bit of confluence, something like that. And then thinking about the implications of that, and maybe, you know, I mean, for something like this, the trade idea would be like probably this. It would be something like that, because you're like, well, I don't. If kickback's violated, then it's probably not going to be the setup that I'm looking for. Then my trade's invalid. But I'd probably use this pivot there, and then kind of take profit here, 618-706-8321. Like it would be something like that. Anytime, like I'm talking about anytime this happens on like anything, you could like think about it and something like that. Just have a little bit of confluence with that 382, because it's usually on a setup like that, like you're not, like if you just pull like fibs, it was just at the 382 of the move, so you're not even getting like a good 50% discount of the move. So it's a little, it's a little aggressive, but anyway, I think. Yeah, no problem. If y'all have any more questions, find me in chat, public chat, or in the indexes general chat channel of Top Floor. And yeah, check out our Discord if you're not a member yet. Definitely come and check us out. And then if you're new to all this, and you can ping me and ask me questions, and I'm happy to help you learn some of this stuff, because some of this fib stuff isn't stuff that you see I don't know, from other trading resources on YouTube and stuff like that. So happy to help if I can. But yeah, just wanted to do this kind of public video about where I see Bitcoin, and then go over some of the trades and all that. But it's a weekend, so I'm gonna enjoy the weekend. I hope you guys do the same, and I'll see you next week. Bye.